Mortgages are such a scam. I bet you've seen a video start like this, and they can feel like a scam if you don't understand how they work. So I've just had my mortgage annual statement in, and you've definitely seen videos where people go through their mortgage annual statement and say that mortgages are a scam. And I'm going to explain how mortgages work using my mortgage annual statement. Now, I'm not saying I'm going to convince you that they're not a scam, but this should hopefully explain all the numbers that go into it and why it can feel like that. So last year, we paid around about £16,000 over the full year, not a month. But our balance only came down by around about £4,000, which means we've paid around about £12,000 in interest to the bank. And on the face of it, that looks pretty shit. So here's how this all works out. Our rate is 4.01%. And the reason you're paying so much more interest at the start than capital is because in your first month, you're paying the interest on, in this example, £300,000. So the interest is calculated at 4.01% of £300,000. Obviously, month 2, the balance will be less. Month 3, the balance will be less, all the way through to month 12, where the balance, if you're taking £4,000 off, is £296,000. So you're paying 4.01% of that balance. So over time, the amount of interest you're paying actually decreases and the amount of capital you're paying increases. It doesn't look like a lot in the first year. I mean, it's not, but it's because these figures are still really high. And that would apply even if you took a mortgage of £100,000 or £500,000. Doesn't really matter what your mortgage is, the way the maths works is the same. And that results in these two numbers. On our first monthly payment, 76% of it was interest. And by the 12th monthly payment, 73% of it was interest. So you can see it is coming down. Now that doesn't necessarily mean it feels much better to see the fact that you've paid 16 grand, but only 4 grand's actually come off your mortgage. However, next year we're going to pay the same in terms of monthly payments because we're on a fixed rate, but the amount coming off the mortgage will be more because the interest will be less because these balances are less. And that's how it works. You pay more interest in the early years of your mortgage because your balance is bigger, and then as you chip away at it with your capital repayment mortgage, the amount of interest you pay every month will drop, which means as you get 5, 10, 15 years into your mortgage, and if interest rates come down, that'll help, but you'll start to see a flip in terms of how much your monthly payment is interest and how much is capital. So I hope that helps explain it, that they're not a scam. I mean, it's just not great in the first year because the numbers are so high, but it can feel like it if you don't understand how it works.